Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have James Jack. He's the head of Business Owner Multi-Generational Client Segments at UBS to discuss UBS's InvestorWatch, surveying business owners who have recently exited or planning to exit their businesses. It's great to have you with us, Jack. Welcome to TradeTalks.
Thank you for having me.
What can you tell us about the InvestorWatch report's findings, and what should the major takeaway be from this?
I think the key thing, Jill, is that after a lot of robust M&A activity in the middle market back in 2021, business owners are seeing the headlines that there's been a slowdown, which has been largely driven, I think, by a lot of technology companies. And so they're worried that, did they miss the boat? So the InvestorWatch report that we did, we surveyed 500 different business owners. It's called Wind in Your Sails. It's all about how they're thinking about exiting. And so the key takeaway is those headlines, they're definitely having an impact on business owners, and they're not entirely prepared for a sale. So they should begin working and planning to exit their business.
So how are these findings going to impact your work and the way you communicate with business owner clients?
So at UBS, our financial advisors work a lot with business owners. After all, being a wealth management firm, entrepreneurship is the driver of wealth. So what we're doing is using this report to arm our financial advisors in their conversations with their business owner clients and basically say, hey, even though the M&A market right now may be seeing a slight pause, you shouldn't be sitting on your laurels, right? Get out and go, begin planning, do all the preparation work.
What are the most pressing fears expressed by respondents that present the largest growing risk in today's markets?
Yeah. I'll go back to what I said in the beginning, which is that business owners are seeing those headlines. So 40% of our respondents said that they regretted not selling sooner during that time period, and 61% of the business owners they are concerned about lower valuations. So that's, I think, where a lot of the consternation comes in. And so what we're trying to, again, say is, okay, well, this may not be the right time for you to exit right now, but you still have so much to do in terms of your planning, because if you do the planning work now, you can be intentional right now and really begin doing the work that could be quite significant in terms of saving millions of dollars in terms of pre-tax planning. So
let's learn more about that. What are the most common ways that you advise clients that are looking to exit to begin to prepare? It sounds like it could be overwhelming.
Yeah, it can be a bit. I think our financial advisors will start with help build a team. Almost a third of the respondents hadn't really formed their professional team, which you might want a CPA, an attorney, an investment banker, and of course a financial advisor. So that's kind of start number one. Leverage the people who have been in a sale process before to build it. Then go start the pre-sale planning I mentioned. So a third of our respondents have not put any structures in place to shield their sales proceeds. They haven't thought of an estate plan. They haven't talked to their heirs. So a lot of what a UBS financial advisor is doing is helping with that advanced planning work, working with their CPA, their attorney, helping with some of their family issues, talking about wealth and stewardship with their heirs. So these are kind of the key steps. Also, bring in an investment banker, help get the business ready so that when opportunity knocks or the market begins changing, you have already done the work that will help your business look the best to a potential buyer.
What's the time frame for that when you start to think about it to an eventual sale?
Well, most of the respondents, about 3/4 of the respondents who have already sold the business, they said they took about 2 years or less, but 81% of them said, I wish I took more time. So I think 2 years is a good time frame to certainly get going on it, but we always say start now. It could be whether it's 2 years or 5 years or 10 years, at least start working a little bit on it, start chipping away every day.
Was there anything surprising that came through the survey?
I wouldn't say it's entirely surprising, but it's surprising in the sense of how big it was. So 85% of our respondents said that they had some concerns about what a new buyer may do to the business or to their employees. And so that, just the fact that 85%, that's effectively almost everybody. And so with that, you get a lot more conversations about things like ESOPs, employee stock ownership plans, and other activities about what their life will be afterwards. So really, I think from that, financial advisors can think of other strategies other than just simply selling to a private equity company, for example. Right. So those are, I think, the big one is that it's more than just money for a business owner.
Right. And to your point, I don't think it's surprising either, especially if you're a founder, owner. I mean, this is
your
like
baby.
A child, right?
Exactly.
And of course, you care about your employees that helped you build this as well.
Yeah, absolutely. You want to reward the people who got you there.
Right.
So absolutely, it's a big part of it. I think for a lot of folks, their business is it's their time, it's their social life, it's their purpose, and their community around them. So it's a big part beyond just what's the pre-tax planning work, what's the investment banking. The transaction will come and go, but that feeling inside of you will stay for much longer than after a business exit.
All right, James, we appreciate the insight. Thanks for
Thank you
joining
so
us
much
on
for having
TradeTalks.
me.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.